last year in August, we launched Mega Motor Company in partnership with BYD. We have set up 5 dealership points, 2 in Karachi, 2 in Lahore, and 1 in Islamabad. And we launched 3 brands so far of the BYD. Atto 2, Atto 3, and the C were launched last October in the Pakistan Auto Show in Lahore, and we have seen very, very good reception of these 2 brands. And then we've also recently, in late end July, we launched Shark 6, which is a pickup truck, plug-in hybrid electric vehicle. So earlier 2 were the pure electric vehicles, and these are the Shark 6 is a plug-in hybrid electric vehicle. And we've seen some very good numbers. Atto 3, you would see it on roads. Month on month, we started deliveries in February, early March. And since then, we've seen healthy volumes, which are very, very consistent with our expectation, because it has become the preferred car in its own category. Then the Shark 6 we launched in July, and we are happy to report that it has actually done better than a lot of industry folks actually thought. So we have more than 500 orders in almost a month, and the deliveries will start in a week to 10 days time as well. So you will see a lot more of these cars as well. The experience center that we've set up are actually a company owned, and when you go in, you will feel the difference that we are trying to create in this space in terms of our customer experience, in terms of the service, in terms of the product that we offer. I mean, obviously, the sales, the month after month sales are a testament to the product as well. On the plant side, we are setting up a 25,000 units plant at Gharo outside Karachi, and the civil works are in full flow. The first LC has been established. The first shipment should happen by the end of September. So the work is progressing. And we have the experience of doing the project management for large industrial projects, which is Talnova, Thar Energy, China Power. We've developed those projects with our project management team. A similar project management team is used for this facility as well, and we are confident that this will be able to start production in mid of 2026. So indicative term sheets have already been lined up and signed up, agreed with the local and the foreign lenders, and the financial close should happen in coming months as well. So we feel that when this facility can be expanded to 50,000 units with a minimal expansion as the market grows, we will be there. Lastly, on this electric mobility, we would say that as you might have seen global offerings of BYD, that they have a car for every category from the very low end to the luxury end. And they've done it in multiple brands, Yangwang, Denza, BYD brand names. So we will be offering cars from, if you were to look at Pakistan, from 4 million to the 30 million range, which pretty much covers everything. So we have done over the last 1 year, we've launched 2-3 cars. We will continue to do it once the start of production happens, and then the CKD will happen for the most of these brands that we are launching in Pakistan. Next slide. So one of the top of the mind question that comes when you think about EV is the range anxiety, and in order to allay those fears, we've also started, given our footprint across Pakistan, Hubco Green, which is tasked with putting up charging stations across Pakistan. So far, we've done 8, and our goal is before the end of the year, inshallah, we will make sure that there is a charging point on highway every 150 to 200 kilometers. That is what we have set ourselves up. So you can move from Karachi till Peshawar. And we have partnered with PSO, we've partnered with Atak Petroleum, we've partnered with Total Parco, because these are the places which you find more conveniently on the highways and the motorways. And in the first leg, we are setting up 5 charging points, which are underway at this point in time, to get one per driver from Karachi to Multan. And then onwards, we will get them so we will have enough charging capability. The fast chargers will be 60 to 120 kV kilowatt. These are charges because we feel that this is sufficient as of now, And then we will expand our footprint across onto the destination charging and within the cities as well. And in line with when our production or our assembly plant starts production, we will look at doing more and more charging points within the metro areas as well, so that it enables the small car owners to charge their cars. Because if you might have, any one of you have bought a BYD car, we offer a free 7 kilowatt hour charger, which basically can be installed at your parking spot. And most of the people in Pakistan, unlike the Western world, have a parking spot. So it has not been that big a concern. But when you go to a smaller car offerings, you need to make sure that they are not left without any charging options. So we are very cognizant of this fact, and we are continuously partnering with people, and we will build out this network rapidly. Power generation portfolio, again, we have the 3 base load plants, which is Thar Energy, Thalnova, China Power Hub, which are on the top 15 of the merit order. And the Thar projects are in the top 5. I think the 2 things that we actually ourselves look as our KPI is the availability and the efficiency of operating these projects. So Alhamdulillah, we've done last year for all plants, we've done better availability and better efficiency, because we believe that we have the best practices in the power generation, operations and maintenance, and that is reflected into our capability to keep these plants in the operational condition. Dispatch is determined by the load onto the grid, and we might have seen over the last couple of years that the load has varied with the ingress of solar, with the north and south transmission constraints, and a lot of other factors which are beyond any power generation company's control. But what we are committed at all times is that whenever we are asked to dispatch, and if we are being dispatched, that is done at the best efficiency and availability numbers. We hear about a lot of, as a company, we are quite a growth-oriented company as well. So we continue to evaluate opportunities. We only highlight the opportunities which we have actually entered, rather than talk about what is on the drawing board. There is a lot more on the drawing board at any given point in time. So the 2 noteworthy developments over the last 12 months have been Arc Metals, where we have engaged a mining prospecting company, which is doing drilling in the Balochistan. It's a much smaller, so if you were to categorize, it will be called a junior miner. And we are, the drilling operation is underway to entrenching, to evaluate and do the geochemical and geophysical analysis of that core samples. And we will be producing a first reserve report within this fiscal year, which will be used as the basis for the next stage of the mine planning and what the investment outlay would be. It is much smaller than what you might have heard about other mining operations in the neighboring area. But I think we believe that it is better to establish yourself with the credible data and the capability before you enter in a big way, rather than just getting a mining lease. So we will be expanding into it. The results have been very positive so far. We have also done a scan of some of the other minerals which are not these mainstream minerals, and we have the first technical report for that, and we are continuously evaluating. We will disclose it whenever it is in a form and it is in a shape that we feel that it is now worthy of sharing it with the shareholders as well. But we continue to evaluate the scope and the possibilities in this area, and it is not limited just to Balochistan. So, and we are looking at other critical minerals, which the list has expanded over the last couple of years, ever since the AI and the EV manufacturing has become a big thing. On the prime, we have successfully acquired 2 new blocks, Sukhpur and Nang Sharif, and we are pretty close to basically the PCA, which is the document from the DGPC you get, and we are going to start the drilling here as well. We also farmed out into Baran block, which is managed by Polish oil and gas company. We are only a 10% stakeholder. We acquired from another entity. We continue to evaluate opportunities in Pakistan, and we are now actively looking at offshore in terms of going out of Pakistan, not in the offshore waters of Pakistan. So we are actively engaged in the Western African reservoirs, and we are looking from South Africa to Egypt to Morocco to Cameroon, Namibia, everything. So we are actively evaluating those opportunities, and whenever any opportunity comes to fruition, we will share that. So again, we acquired this company to continue our growth into the oil and gas and the energy space across Pakistan and outside as well. So the next. I'll just, the operational highlights I've already covered, but given that the Narowal, the availability is the numbers, you would see that the blue is the PPA requirement or the last year's, and the green is this year's, and every plant we have a better availability than last year. If you go onto the load factors, as I've said, that the load factors are a function of the load demand and is a function of how you get a dispatch. Even if you're in the south, on the merit order, there are other considerations which result into not being dispatched. So CPHGC, you would see, has a less dispatch, and that is for all the plants in the south. But whereas Tel and Thalnova, they have a higher dispatch than last year, and we still feel that the coal plants at the top of the merit order should be above 80%. That is how they are designed and planned. But I think going forward, it will continue to improve as the grid capability of dispatching power from south to north increases. You will see an improvement in all our south plants as well.
Okay, so these are the financial highlights on both the consolidated and unconsolidated level. Our profits, our revenue has gone down, and EPS has gone down, and this is and the reason is the same which we have been discussing in the earlier quarters also, that our PPA, HUPCO PPA got terminated last year, and there was a settlement agreement of Narwal also, and this has resulted in the reduction in EPS. So what we have done is that we have used those proceeds to actually prepay our loans which we took for investments in TEL, Thalnova, and CPHGC. So right now, the situation is that as far as HUPCO is concerned, we don't have any loans which are not covered through the capacity purchase price. We have loans in our projects, CPHGC, TEL, and Thalnova, but against that, you get the debt servicing component, and there is no debt on the books of HUPCO or HUB Power Holding, which is not covered through the debt servicing component. And post termination, what we also did was we actually proactively optimize our operating expenses, and those expenses have been brought down in line with the closure of one plant and amendment to the Narwal plant. And the other positive thing is that collections from the power purchaser were significantly higher than previous years, and this has resulted in improved cash flows across all power generation assets.
So these are last year we've been, given a lot of awards, which is just the Excellence Award in Power Generation and Distribution. There's also been the HSE Award that we've given, and we continue to aspire to be in the top 25 companies at PSX for a number of years, and there's a lot of effort that we continue to put in to stay there as well. Next. So sustainability initiatives, obviously, as a responsible organization, we have focused on developing the ESG policy. We are the mangroves plantation. We continue to focus onto this part across our assets. So we are present in places like Narwal, in Thar, in Balochistan, in the middle part of Sindh as a prime as well. So, and even in Balochistan, the mining belt. So we continue to focus there, the waste management, the water, the livelihood, the health initiatives, and the education initiatives. We continue to focus onto those. Next slide. So these are covered. Lastly, I'll just answer before your questions come that, after the retirement of our hub power plant, there are plans that we are evaluating and we continue to evaluate. So two things that over the last 12 months that we've evaluated is the use of our oil storage at the hub plant, and then using the Asia Petroleum Pipeline. We are in conversation with PSO, how to use that for the white oil or the other oil transportation from hub to Zulfikarabad rather than what has happened for the last 27 years. So that is still being discussed, some of the details, and we will, whenever something substantial progress is made, we will share that. We, at the same time, we also were in conversation with the Chinese over the last year about setting up an aluminum smelting facility at that location as well, because it is closer to the sea. It has all the infrastructure that you need. But obviously, there has to be it's a long-term project. We continue to evaluate. There are certain challenges. And given that this industry doesn't exist in Pakistan, so there are a lot of regulatory requirements that we are working on. But whether it happens or not will be determined by the economics and the other factors that we look at, because the raw material availability and the competitiveness, because the consumption of aluminum in Pakistan is a lot less than the facility that we plan to put out. So whether it's going to be internationally competitive, this will be. Other than that, we keep evaluating opportunities, and people keep asking us that what we are looking at. So they range from, even we looked at data centers as well, but it's not something that we feel at this point in time in Pakistan there is an economic or a technology rationale. Although you would hear about all these things, but it is dependent on to the local data, which is not as much as it will justify a large data center in this country. Although our facility, to be very honest, at Hub Plant offers what a Tier 4 data center requires. So the Tier 4 data center requires N+2 backup power redundancy. So we continue to look at that, and I think until and unless the economics make sense, and until and unless an international cloud operator can use our facility for that, you need a regulatory environment, you need to have the data reliability requirements. So we wouldn't get into that, until and unless there is an economic case. But nonetheless, if you look at the sites, it is actually the perfect site, because we have the transmission network where you can offer more than 3,000 megawatts at one location, because the nuclear power plants are in the nearby vicinity. China Power is in the nearby vicinity. Old Hub Plant as a backup facility is there as well. There is a water resource. Submarine cables land into the neighboring, beaches or locations. Lastly, we are also part of a consortium which is evaluating PIA with the Lucky and Kohart Cement and Gul Ahmed Energy, or the Metro. So we are in the process of due diligence, as you keep hearing. If there is any positive development, we will also be disclosing that. So the work is underway. There is the due diligence, and there are dedicated teams working from the consortium onto that opportunity. So that will be in the next 6 to 12 months. That is something that we are actively looking at, and I think there is a lot of potential to turn around the national carrier as well. Obviously, it is a bidding process, and whatever the outcome will be will determine how we take it forward. So that's the biggest thing that we are evaluating at this point in time as well. And time to time, the opportunities keep coming up, and we keep doing the evaluation. And whenever something substantial will happen, we will be happy to share with our shareholders.
Should I start the question? Okay. So the question there, how will the financial dynamics of EV charging stations work? What will be the margins like, and how much investment does the company plan to do?
So it's too early to say, but I'll just say that as the Chinese have made the EV very affordable across all categories, similarly, the charging infrastructure or the chargers earlier used to be done by the European vendors, which were at least 5 to 8 times more expensive than what Chinese are offering. So the economics has improved. We've done some analysis, so we feel that 3 to 4 cars a day will help us break even onto all facilities across Pakistan. Obviously, these numbers need to be looked at as the EV penetration increases. There is a potential that when you go to a destination charging, you could do a lot more than just the charging point being used as a charging point. There could be other branding opportunities which we've not looked at this point in time. We are focused in making the charging network available across Pakistan. But if you were to look at a break even, it is 3 cars a day at any point. across charging points. And they can be, for that, you will have to have an upgradation of the grid capability or a backup generator or a battery energy storage solution. So we've done these numbers. So if you were to do all of these, I think 3 cars a day at a charging point is a break even.
How many units of booking of cars have been received for BYD thus far? And when will the company start localization of units? I think that you've already answered.
So I'll say that more than 2,000 units have been delivered. If I were to give you a order number, category-wise, a split will be difficult to share, but we see healthy and a consistent sales across it's only been less than 6 months if you were to look at the delivery profile of our cars, but the orders in hand are continuously being monitored and they are at a healthy trend as well. So.
Can you please confirm that APCO has received any dividend from CPAGC in July or August? If yes, what was the amount?
So we have received healthy dividends from China Power Hub Generation. So the information that we can share at this point in time is that we have received better than the ROE component because of the better receivables over the last 1 year and the better financial management at the company level. So we've received healthier than expected dividends. So that'll be.
Can you share the effective equity interest of Mega Motors with BYD of China?
So at this point in time, it is the BYD has not entered into any equity relationship because they have across the globe only invested 100% in the facilities. But we were the first company where they have set up an assembly plant specifically, which is the third party partner or given it to a third party. So if you look at Thailand, they spent $1 billion. If you look at Hungary, if you look at Brazil, all these facilities are 100% owned by BYD, whereas they have the option and they haven't finalized that model. The equity participation in this project is 50-50 between Mega Conglomerate and Hub Power Holding Limited. The project cost is about $150 million. It's a 60-40, the debt will be 60%, the equity will be 40%. So each shareholder will put about $30 million of equity. And as I shared earlier, that we have lined up the local and the foreign financing for this, and everything is on track to be, the project is on track to be completed in 2026.
What is the current trade debt position of CPAGC and what amount is overdue and how much is the LPF?
So total outstanding of overdue of CPAGC as of end of August is 53 billion.
What is the current cash position of Narwal and can we expect a similar dividend payout from it going forward?
So as far as Narwal is concerned, as we all know that there was a settlement agreement and Narwal was shifted to a kind of hybrid model as far as the ROE is concerned. So Narwal will continue to get to actually generate cash flows and dividends for APCO, but the quantum will be much lower than what we have seen in previous.
Can you elaborate on the dividend cycle of CPAGC? When do they usually declare dividends and is there a consistent pattern?
So they have a once a year distribution window as per the financing documents, and it happens once a year in the early part of the year as well. So that's when it is. And over the last 2.5 years, we've seen a consistent pattern of that. We've achieved the PCD, which is the major milestone for the dividend declaration of any of these CPEC projects. So we should be able to see the consistent pattern going forward as well. As I said, that we have been receiving healthy payments. We are also managing it in a way that we make sure that it continues to deliver dividends to the shareholder, which is Hub Power Holding and the China Power International as well.
When are Thal Energy and Thalnova expected to start dividend distributions? Is there any timeline? What payout ratio should we anticipate?
So we are actually, it's been obviously any shareholder will make investment for reaping the benefits. So the team is working with the lenders and and the other stakeholders to achieve the project completion date, which is the major milestone. And the work is under progress. It should be happening sometime in the second half of this year, which is before the end of calendar year. We are quite hopeful that that will happen. Just to answer the other question, that for TEL and Talnova, the dividend windows are twice a year, not like China Power, where it is only once a year. So whenever that happens, again, the effort is there to take the dividend out of those investment companies as well.
When do you start locally manufacturing BYD cars? How many charging stations are you aiming at? I think to answer this. Why is there so much delay in HUBCO's stake increase and regulatory approvals in SCCMC to 17%?
So there have been some changes, as you would know, that our desire to enter into SCCMC was because we are one of the founding partners into that project. So we basically were entering into this space when Engro was exiting, but now that exit has not happened. I think there are regulatory delays, but if you were to look at the company's progress, they are actively working towards expanding the mine to 19.2 million tons, which is basically going to be the phase 3 of the project, where they want to supply to Lucky. There is a rail link which is being developed. So that has not hampered the company's ability to expand. I think so. As long as so there is no difference in whether we've been able to take our stake up or not, but nonetheless there have been some regulatory challenges there, and we continue to remain engaged with those interfaces to see when and how can it be done at a quicker pace.
Does HUBCO BYD plan to enter the electric two-wheelers and three-wheeler market in the future? And any planned timeline on this?
So when we were looking at the landscape, looked at two and three-wheeler, I think we made a choice to remain in four-wheeler, and BYD is only a four-wheeler and the luxury car company that they have positioned themselves. There are other two-wheeler and three-wheeler companies in China, and they have done some partnerships with other Pakistani companies. We do not desire to look into this space.
What is the status on dividends from SCCMC?
So that again, that company, due to this change of ownership, has delayed the dividend distribution to the shareholders. But I think that matter is being looked at by the board and the shareholders, which should be happening soon. So I think the delay was because of this earlier part, that there was a sale of Engro energy assets, and due to that but the company has been consistently generating cash which can be distributed to the shareholders.
What is the market response across BYD's product lineup, particularly the Shark 6 model? Additionally, what is the company's sale outlook for the year 2026? And the CPS representation refers to an indicative term sheet signed with the lenders. Has the final term sheet been executed or not?
Yeah, on the term sheet, we have signed the final term sheets, and right now we are in the process of documentation related to financing agreements, and we expect that we will be able to achieve financial close in the last quarter of this year. As far as Shark, as far as the BYD vehicles are concerned, as we mentioned earlier, also we have got very healthy orders, and there has been very encouraging response for all the brands we have launched recently.
I think a lot of people had a lot of concerns about the 100% EV being successful or not, because when we put in a lot of effort and we have spent, I guess you would say that the education dollars as well, that it has become a top of mind brand in its own category. So the category Auto 3 it's called the category C, where we are the leading brand at this point in time. And you might have seen other competition come as well, but that's where we feel that there is a sweet spot of delivering a quality product, making sure that there is a quality customer care, and then there is a backup after sales service as well. In terms of Shark, I have already mentioned that we've done better than what many industry people were speculating. We don't speculate onto the car sales numbers, because we are looking at setting up our CKD plant facility, and then we want to ramp up the sales as well, and we will have the sales network across Pakistan by that time. We are actively evaluating the dealerships across Pakistan. That could be Faisalabad, new dealerships in the KLI network, in Multan, in Gujranwala, in Sialkot, in Gujarat, in Peshawar, and they will happen as we were to enter into the CKD operations. So we are basically are cognizant of this sales volume as well, and we are doing reasonably better than what anybody else or any industry benchmark that people are evaluating earlier. So hopefully when we will offer newer models, we will offer in different categories, category A, category B, category D. That's how the cars are defined in the auto world. So we are very hopeful that the products that BYD has launched so far have done well across markets in international markets. So from Australia to Mexico to Europe to Southeast Asia, we are very confident that the similar quality will be delivered to the customers here, and we expect a positive and a better response than the competition in China.
What are the current receivables for CPHGC, Third LG and Innova? And what is the status of government payments to Chinese versus local entities?
So overdue for CPHGC as of end of August was 53 billion. For TEL it was 12 billion, and for Innova also it was 11 billion. So receivables have gone down. Earlier they used to be overdue would be 3 to 4 months, in fact more than 4 months overdue. But now, right now, for almost all plants, receivables are between 1 to 2 months. Overdues are between 1 to 2 months, which are very manageable.
So I think one of the other benchmarks to look at is that obviously this sector has been under a lot of scrutiny, but because if the circular debt number does not increase, which has been, there has been active management, that the overall circular debt number should not increase due to the IMF program and due to the focus onto this area as well. So every power plant receives a better payout, and that's reflected as Saqib said, that we've gone from 3 to 4 months receipts being outstanding to 1 to 2 months, and that is across. You will see this pattern across power assets for any company.
Okay, why is there no progress on reusing the oil-based plant area, aluminium smelting, or reselling GE equipment?
So you see, as you would know, that all these large infrastructure projects or the base projects take time. If you were to look at how long did it take any of the projects to be developed, may that be the original project, it took more than 8 to 10 years to develop it. If you look at Thar, it took almost 10 to 12 years or 10 years to develop any large infrastructure project, which has not happened in the country. It takes a long time because there are regulatory approvals, there are other things as well. And then out of all of that, there has been economics has to be there. And this is a large industrial site. We always evaluate opportunities which is sizable for a company of the size of HUBCO. We have a capability, an engineering workforce, a patient capital, our ability to raise capital for large infrastructure projects. We are evaluating other opportunities as well, but as I said, that it's a long, drawn-out process that happens. Even if you were to look at our EV project, it has taken, almost a year in operation, and the CKD will come after 24 months. And we were evaluating, if you would recall in our corporate briefing sessions, we kept talking about this EV space for the last 3 years. So we keep on evaluating those, and hopefully when minerals is another area which I think could open up the site because these metals have to be processed somewhere. So all this ricodic and all that copper and gold and everything coming out of the Balochistan region has to be processed somewhere. Either it will be processed offshore or outside Pakistan, or there could be an opportunity to process them here as well. And there has been the conversations at the regulatory level to have some sort of a metal processing park or something. So as I said, that this is a very strategic site, closer to the water, closer to the brownfield infrastructure. Whenever the opportunity comes, we will do that.
What is the status of the new business ventures like battery storage systems, solar panels, manufacturing?
Again, it comes back to the economic rationale. So, if you can be a cost competitive producer of a battery storage solutions, then you would definitely put it. And then the pace of innovation happening in this space is mind boggling. And the price decline is equally, out of this world, because as we have seen that the solar prices over the last 13 years have decreased faster than any anticipation outlook. And then the offtake of these, or the solarization we talk about in Pakistan, is also extraordinary. Similarly, we feel that the same thing is going to happen in battery energy storage solution. Now, in order to set up the storage solution factory, so we are not an assembling, because battery energy storage assembly, the major cost component in the storage system is the cell. And if you do not have any critical element to offer to the Chinese partners, then their cost will be much better than you can actually do. So I think we continue to evaluate that space, but at this point in time, the economics do not make sense. If we were to find a very, very cost competitive lithium reserves in Pakistan and can upgrade that capability, or a nickel or a magnesium or anything, then yes, this equation changes. But at this point in time, with no lithium, active lithium reserves or productive lithium reserves, I don't think that they have any incentive. We are not a big enough market for the storage, solutions as well. Yes, we may be a big market, but we will not be. And similarly, many companies have tried to set up the solar panel manufacturing. We looked at it. Again, it was the same thing, that the cost competitiveness for the Chinese manufacturers was far too superior for any player to enter into this space. Although we were approached by the top 5 solar and the top 5 battery storage solution companies as well. But economics trumps everything.
Does Arc Metal have the same success potential as Ricotic, or on a smaller scale level?
So if you look at the Tethyan copper belt, which moves from, it's the Earth's core, which moves from Greece to Indonesia. Obviously, it is spread out randomly. So we don't claim to be as, only the studies can confirm how prosperous that area for copper or gold is versus any other neighboring block. So we are not looking at competing with anyone. We are looking at that area and trying to establish that this reserve and the credibility of the reserves there, so that we can expand that area. And when we are to look at investing in development of the mine, we have the credible resource. So the resource prospect will determine how good this is. But so far, the results that we have seen are very, very encouraging. And as I said, that we will come up with the first reserve report, which is the first step. Then you go to a pre-feasibility study, and then you go to a feasibility study. But depending on the results and how you approach it, in a smaller team, we are trying to do that. We can shorten the time to go from first reserve report to the feasibility stage. Obviously, these are big undertaking as well. If you were to develop a mine, even 1/4 of, let's say, Ricotic will require a significant investment. That's how our goal is. And we are very, very positive onto this.
When we compare the price of auto in regional markets in Pakistan, it appears to be very competitively and similarly priced, reflecting good price negotiated with the principal. But this does not seem to be the case with Shark 6, which appears at least 60 to 70% higher compared to the prices. What are your thoughts on this?
So Pakistan is a market where CKD has certain advantages, and the plug-in hybrid electric vehicles are discouraged to be imported as a CBU. So that's the reason that you will see that there's a duty differential between a locally manufactured and then the imported PHEV or HEVs and other cars. But onto the EV, because there was no credible, so that's the incentive for the green climate and other initiatives. But I think that's why we keep on saying that we are trying to bring the cars in CKD, and we can offer a range of product that BYD has for every category. So we have been very, very judicious in launching our products. So we haven't launched half a dozen cars as well, or half a dozen models as well. So we are very, very cognizant of this fact. And that is carefully selected, negotiated. The team which is engaged with BYD is the top notch. So they look at what will be acceptable, how the customer, is delivered a value. So that's where we are. But as a Shark 6, I think I don't want to compare with other markets, but what the product that we are offering, I think it's an aspirational and a better product than what you have available. And if you were to compare it, what other products globally are available, this is, at a much better value for money than what it is.
What is the status of CTPCM? Government terminated / renegotiated IPP contracts with the promise to start B2B sales of electricity. There was news that disagreements are coming on bidding charges, which is the result in delay. Is that correct?
So my personal view has remained consistent that before we get to CTPCM, there is a lot of foundational or sectoral challenges that the regulatory framework and the government and the stakeholders have to solve. I think CTPCM is presented as a panacea. I don't think that it is going to solve and it is going to make the power affordable for every consumer. It may make power cheap for a segment of consumers which are more savvy and which are larger than the average consumer. I think there are bigger problems, and the problem that we see is the demand. I think we have to spur the demand, and that is where we have to work. We continue to work on the supply side of the problem, but until and unless we solve the demand side of the problem, this problem will continue to exacerbate. And I have consistently kept this point of view for the last 5-6 years. And I think if there is a solution, you have to focus on the demand generation, or in the terms of encouraging demand onto the grid. And that can only happen with the reform of the sector if you look at it comprehensively.
What are the pure consolidated earnings of the company if we remove the debt, principal repayment, as it is included in revenue component? So remove the debt and component earnings plan.
We don't have the numbers right now.
Okay.
We can share it separately.
Why is there slow progress in charging infrastructure installation? EV sales pickup is dependent on people seeing low charging station. I think you.
So
Already.
I'll say that, any place that you go, there you require a grid infrastructure as well. So usually the gas stations are the places where you would put it up. Even in an urban center, they will have a PMT, the transformer, to their load. And if you were to put in a request, it takes a lot longer than one would expect or anticipate. And then there is you'll have to do the feeder level work and a lot of other things. And if you were to go to a highway, in certain parts of the country, yes, there is a lot less load shedding, but on the highways, the load shedding is a lot more than what we experience in the urban centers. So it could be ranging from 12 to 16 hours a day as well. Now we've started actually implementing the backup diesel generator solution, which we will focus on. So you will see a lot more progress. So a lot of teething issues at the earlier part. Obviously, there's been no charging network in this country. And as you move, there are a lot of regulatory approvals. And because the petrol stations are governed by a certain set of regulation, the explosives regulation, and a lot of others. So that progress is a lot slower than what would anticipate. I think putting up a charger and energizing it is 30 days job. But the regulatory approvals and the site selection and all of that makes it slightly more challenging. But by the end of this year, inshallah ta'ala, we are committed that we will get a customer from here to Peshawar on an NHA or a motor.
Do you think China Hub Power agreement may be revised also when looking at lower dispatches?
I think the only comment that I can make that the CPEC is a government-to-government framework, and all that conversation and anything that is talked about can only be determined at the government-to-government. It's a larger framework investment that happened in Pakistan. So any comment or anything is premature on our part. We are not aware of it. Any conversation of the government-to-government, whenever that happens, all of us will find out through whatever the official information will be.
What is the capital structure of EV stations? Are there equity partners in this venture? How many sites are you targeting on motorway? I think motorway one you already.
So we are a partners. So this is a partnership with all the ONGs that we have partnered. Obviously, we are also working on a franchise model where we can actually make all the infrastructure related, charging point related information available or hardware available, and provide the O&M services and the guidance. We also have a very what the consumer doesn't see at this point in time. We have a a software which monitors our charging stations as well, which provides the capability to monitor who has, visited our charging station and at what time and how much he charged, and all of those information, which will be integrated into our BYD cars as well. At least as initially, we will make those charging points visible onto the app as well. So that's what we either Google Maps or whatever, if their internal app is, that work is happening. We will, if there is a coffee shop, if there is a off-road, some destination wants to put up a charging station, and it is difficult for us, let's say, to put up in Jhelum somewhere, we would provide the same quality of products to them. We will provide them all of that and then monitor it through our software and provide them the backup service. So we feel that after we've done the highways, every 150 to 200 kilometers, we would offer that, and that is being worked out by the team on working on the charging stations.
What average trend of cash flows is the company expecting for IPPs of each of the 4 fuel sources, FO, idle, local coal, and imported coal?
Basically, our main cash generation will be from China Power, TEL, and Thermova. And Alarev continues to generate consistent dividends. But if you look at the main cash flows, they will be from Thermol project and China Power.
Stance on government allowing used car imports with lower duty, given the large investment BYD is making, are we re-evaluating the investment? How are you saying this impacts your business?
I think that's a larger industry conversation. Everybody, I think you do not want to be basically a used car heaven for developed markets. As you have seen that the new players have entered and made sure that they offer the best quality product being offered to anybody, anywhere in the world. And I think Pakistani consumer deserves to get the top-notch quality product. You don't want to get a previous generation cars, maybe that be cheaper. What you do want is every car category being served with the top of the line innovative product. And as we've done in Atto 3, as we've done in Shark 6, as we've done in Seal is a great product, right? I mean, if you ever, anybody who's driven the car has come back and said, it's as good as a top-notch European brand. It's just that, their option might be different, and the Atto, they're the decision point. And we want to do the same for the category A, which is the category which is 4 to 6 million category, right? So we are concerned about it, but I think the consumer will determine whether that model is successful or not. Obviously, we do not think that that's the right move. And the industry is actively engaged with the regulators to highlight that there are a lot of challenges, not only in terms of the quality of the products being imported as a used car, but also increasing the carbon footprint. The future is here. You need to look at the best combustion technologies, may that be PHEV or a complete EV, rather than getting the gas guzzlers and inefficient combustion engines into the country, which will continue to further deteriorate your weather around you. So that's what I think are the consideration. The economic consideration that are presented can be challenged at any forum. I wouldn't like to delve into those details. Industry and the PAPAM, the auto part manufacturers, have done a consistently good job in educating the population at large and the key decision makers.
Has any of the company's CPEC plans received any upfront payment as total stock of power sector circular debt reduced by PKR 800 billion approximately by June 25? And
so we have we keep hearing about those, and then as I said that the receivables payments have been better than previous years, and that is a function of active management of the circular debt, that you don't want that circular debt ceiling to be breached. In terms of time to time, there have been, the power sector subsidies which are budgeted, and they are allocated to the plants based on whatever metric the power ministry uses. So yes, overall, the receivable has been better across the power generation units.
what happened to the MOU signed with KE for water salination through old plant reuse?
So obviously, we looked at it, and as any other project, you would look at the economics. I think until and unless the water sector is overall reformed, we do not want to go and provide a fundamental utility, which is water, and then be in a situation where the collection of money doesn't happen. So I think we looked at it, the economics and the viability of it, there were a lot more regulatory challenges. We were looking at TP1 wastewater treatment as well, which has been delayed beyond our imagination. We started looking at it in 2018. It has not moved, although the multilateral partners have been actively engaged. The framework has been revised. So I think it's a very difficult domain. I think water is a very, very sensitive issue. So economics, other than the overall reform of the sector, no matter how good the economics is for us, we don't see the sector's viability for the government or the public at large at this point.
Does waiving or rescheduling of LPS on CPHEC impact companies' DSCR ratio? Will it impact the payouts in the going forward years?
So we don't speculate onto things which are, which are just imaginative or which are being talked about in the media only. So as I said, that the CPEC is a government-to-government framework. There were a lot of commitments by the government of Pakistan as well, including the revolving account, which all of us saw in the earlier part that has not been completed. So I think it's a framework that this has happened. So any conversation about this anywhere is without any evidence that we have seen.
Also, can you repeat the receivable short-term borrowing and LPS figures for CPHEC?
Overdue receivable as of end of August was 53 billion.
Do we expect a reduction in price of Shark once it's available in the CKD version?
As I said, that we don't make any comments onto the future as well, because we will continue to price our products competitively, whatever we value, the value that we offer to the customer. It will not be whether we can, whatever going to be the pricing decision. Again, at this point in time, we have competitively priced this product because anybody who has seen it and that we had the test drives going on and the order that we have seen so far show that this has been well received as well. So any pricing decision will happen at whenever, whether increase or decrease is only speculative on our part. I think it's the overall auto sector environment, how our cars have been received. It's a quality that we offer at a price that we offer. So.
The revenue from joint ventures have decreased by 19%. Is it due to Prime International?
Prime has a one-off charging last year. They actually had an accrual. What they did was that there was some reduction in the decommissioning cost, which is not the case this year, but it is primarily because of some accruals.
Okay. Under the auto policy, how many cars in CBU form can you import?
So that part is what people keep asking about, is that this is a regular commercial import. Under the CKD plant facility, there are a small number of units that you are allowed to import as a testing vehicles. We are not using any of that, so the people might be thinking that we are. So this is on a regular basis that we commercial.
So there is no cap on CBG imports on a commercial basis. So what you are talking probably referring to the fact that once we have the CKD plant online or it is coming online, then there are certain imports of CBUs which are testing vehicles which come at a certain discount, at a certain tariff discount. But we are not availing it. We are actually importing CBUs at the normal duty regime.
Can you provide details on the single point mooring and its expected contribution?
So basically, just on a high level, that if you would think that Pakistan's oil import infrastructure is heavily reliant onto Port Qasim, and the Port Qasim channel is quite congested. And this pipeline served hub plant from Zulfikarabad to Hubco. And there is an opportunity. There is already a single point mooring that is being used by a neighboring facility. So PSO, which is the majority or almost a majority owner of Asia Petroleum Pipeline, has looked at it as an alternative import mechanism. So if you were to have a single point mooring off the coast of Hubco or Hub Balochistan, so then you will basically be using the same pipeline which is connected to the white oil pipeline going up to Mahmood Court, which is closer to the Parco refinery upcountry. So that is the structure, and there will be a rehabilitation of this pipeline to move the oil against the gravity, because at this point in time, it is moving from the higher altitude to a lower altitude. So they will have to have a the reversal pumps as well to pump the oil from hub site till Zulfikarabad oil facility or oil tanks. So that is what we are working on. And obviously there are multiple stakeholders because Asia Petroleum has an independent set of shareholders. Hub site has its own, I mean, as a Hubco, we are the owner, and then PSO has its own contract. So it's a lot more complicated in terms of the stakeholder and the regulatory framework might be there. So we are doing it. In terms of execution of this project, again, I would say that it will require more time in planning and design than execution. Execution can happen anywhere between 12 to 18 months. So pipeline is there, the tanks are there. So we are in that stage. The conversations are actively happening between our teams and the PSO teams. So this is where the SPM is. So there will be an SPM. The oil will come to the oil tanks that we have at hub site. And then that hub site is already connected to the pipeline. So the only thing is the pumps have to be changed. And that is linked to the Zulfikarabad oil terminal. And from there, the white oil pipeline is also connected. So a lot of pieces exist there. So the timeline is only the PM and the pumps being upgraded.
For Narrowband, how is the ROE component calculated? Is it on monthly or yearly basis since the ROE is now minimum 30% hybrid?
It is only, it is primarily what we get is 35% of ROE we used to get earlier. So it is on a yearly basis. Essentially, your ROE is now 35% of what it used to be earlier.
Is there any update on the CPAGC true-up case, tariff true-up?
No, it's an industry-wide whatever. I mean, no, it's the situation which has been there. So I no comments or no progress that we have seen. So all the CPEC projects, all the coal projects, the true-ups. But generally, the true-ups take forever anyway, right? I mean, we've seen for the 2002 plants, it happened after several years, and then there are certain revisions and stuff. So that's how we see it.
Okay, I think we've gone through this. As RFO-based plants don't have future, why the GE equipment on old plant is not sold to generate huge cash flows for future investments of a dividend payout to shareholders?
I think just to clarify, last year, because a lot of plants got terminated, so we felt that this is not the right time actually to go for sale of those plants because a lot of other plants are also available, and this is the reason why we have deferred it. We will continue to look at the right opportunity and right time to have a look at the sale of these plants.
Yeah, done.
Thank you very much, everyone.
Thank you.
Thank you.